everybody, welcome to First Glance with Jody Vance. We are flashing back with the man of the gold brink. If you remember the first time we spoke with Vishal Toora, September of last year, I think it was when we chatted.
About that time, yep.
I'd like to go back and watch that again. Somebody should, actually, we should, and see what you were mind movie predicting for the year ahead. Because, I mean, you're often bang on. You're a technical trading expert at EQUITY.GURU. And so let me pick your brain for the next few minutes, if you don't mind. First and foremost, thanks for doing this.
Yeah, for sure. Great to be here.
Let's start with your charts, because I believe that that's what the thing was last time we spoke. Is like, you're the chart guy. You look at things in a way that is very helpful for the rest of us, if I might say. How are your charts looking these days?
Yeah, so the charts are interesting, let's say that. It depends what type of asset, we're trading. With the stock markets recently, it's been very choppy, let's say.
Yeah,
the price action has been very choppy, a lot of ups and downs, predominantly downs in the last few weeks. And I think there's, obviously there's a lot of fundamental stuff that's behind it. But in some of our calls, we've been talking about charts on the markets and how there's this area of what we like to call sort of support, and it's just a fancy way to say a price floor. And it tends to be an area, where you see buyers step in, and nowadays I think with a lot of the computers trading, a lot of algos there as well that are doing day trading, they tend to be based around a lot of these technical indicators. On technical analysis, right? When you're looking at the charts. So we as technical traders, we'd like to focus on these areas on the charts because we tend to see areas where maybe a new trend might begin. But alternatively, if these support levels are broken down, then maybe this uptrend that we've been in could be over and there could be a bit more downside. So at the time we're recording this, many of the markets are actually really right at that support zone. So in the next few days, we're going to see if there's either a breakdown and we continue a bit lower, or we see a nice little bounce from here and head up higher. So we're at really big inflection points at the charts, and I guess we just have to see what happens with some of these closes. And I can't say anything right now because we have to wait for the closes for the indicator to trigger. So I'm just watching that in the next few days here.
So, okay, put on your amazing Kreskin hat. What are chart-wise, I shouldn't say Kreskin, because you're predicting because you have the data. What are the hottest sectors to invest in right now?
So I think, to invest right now, obviously the hot topic with the markets per se is inflation and interest rates. And there's this idea that, inflation sort of picked up in January, and now yesterday we heard the Federal Reserve, or Jerome Powell was the head of the Federal Reserve in the U.S. say that, hey, I think maybe interest rates might have to go a bit higher than previously anticipated. Over here in Canada, we sort of paused for now, but there could still be this, if inflation does pick up, rates will have to go higher. So the idea is, for investing is there's a chance we might be heading into a recession, right? If interest rates have to go higher. The central banks are using this sort of phrase, they call it a soft landing, where they'll be able to raise interest rates just enough, like in a Goldilocks zone, where basically they won't cause a recession, but they will tame inflation, right? So that's the idea going
That's the goal.
forward. That's the goal. Yeah, so I think
people need to keep that in mind. If somebody's watching this and is a bit of a novice on this, and I like to come at that our conversations because you're so steeped into it. I would go so far as to say you're a nerd of it, which is a compliment.
Yeah, it is.
I love it.
That to myself too. So.
Oh, do you? Okay, good. But I love the way you come at it, because people are like, oh my God, interest rates, mortgage rates. Oh my God, the stock market. Like, there is a reason why these moves are being made, to just because the economy was growing in a way that was unhealthy, right? So could you just put a little bit of an explainer around what we've had happen since the pivotal sort of click of COVID, plus you know, what we're seeing in Ukraine, plus what we've seen with some devastating natural disasters. Like there are a lot of pieces to this puzzle, as well as politics, particularly in the largest democracy on the planet, in the United States.
Yeah, for sure. I mean, the whole COVID trade was the reopening trade. So
Right.
the idea was, that there was these, like the government was giving money to people, the economy was going to reopen. There's now
Yeah.
people with more money, but supply of goods haven't really increased. So you have people with more money competing for the same number of goods and services, which tends to cause inflation. Although, there's other people who would say it's the money printing which caused that inflation. So we had this, economic boom, right, where things are reopening. You saw crazy sort of GDP numbers, and there's again, maybe I'm going a bit too much into the fundamentals, but there's this whole idea of something called money velocity, where like basically the speed of how quickly money travels in the economy, and usually it's the consumer spending that money. So the idea is, that's been pretty strong, and the goal is, from a central bank stance, is you want to sort of bring that money velocity a bit down, right, to prevent people from spending that money in a way to tame that inflation, right? To, as you sort of said, things are crazy, to sort of calm that inflation down, right? Bring sort of prices low. So in a way, that's obviously the central banks aren't really going to say we're trying to slow things down that way, but that's really what they're trying to do, right? They're just trying to, raise interest rates to that level where they can sort of stop that money velocity, and as you said, bring things back down to normal. I just sort of wanted to quickly pick up on your investment question there. Like, obviously there's so much things happening, and I think, with investments, you sort of want to think ahead of time, right? You want to look at the long term, not trading. We're not talking about getting out of things in a week or two or in a couple of months. You're looking at your long-term investing. And I think, obviously, maybe, with the gold vault behind me, I'm sort of biased when it comes to commodities. But I think, things like uranium, especially, uranium's been very, very hot recently. There's this whole idea that, the move to green energy is going to require nuclear energy. And actually, I believe it was yesterday or 2 days ago, the U.S. Finally brought one uranium reactor online for the first time in a few years. So that's sort of big news, sort of telling you where we're going, because uranium or nuclear energy is required for base load power, and it doesn't release CO2. So technically, it's great for the environment, right? It's the only clean sort of energy source we have. And you brought in Russia, who enriches a lot of that uranium. A lot of the uranium is brought from that region of Kazakhstan, so just below Russia. Kazakhstan is, you can sort of say, the Saudi Arabia of uranium. But there's been this recent talk now of energy security in the U.S. I would include Canada and Europe there as well, where a lot of these countries will now be looking to maybe develop some of these commodity resources domestically. Not just uranium, let's talk about like rare earth minerals as well, with all the stuff going on in China and stuff. But let's just say all the green energy metals and commodities. And that means, either government money or investor money will have to develop those assets here. And I think that's what you should be watching. I think there's going to be a big thing in uranium, copper, and a whole bunch of those other things, such as lithium, graphite, whatever is involved in EVs and anything.
Electrifying. Yeah. Interesting. Going back to that reactor being brought online in the US for the first time in forever, that is a big signal to sort of take away a note here that somebody who's just, following along the headlines seem to be void of actual news sometimes, especially in this noisy news cycle that we live in, that would have at one point in history been the lead story.
I think so. Yeah, I think so. And I think it's just the news came out at a time when we had central banks talking. So a lot of the market right now is moving on any word that Jerome Powell, who's like the Federal Reserve head, is saying. So I think he was doing a testimony to the Senate Congress this week. So that's been taking headlines recently. But if you scroll down, or if you're someone who likes the commodity sector like I do, and I know Chris is a big fan of uranium as well. I think we all at EQUITY.GURU are pretty big fans of the commodity sector because it's not receiving that much love, I guess. But I think, yeah, you know, if you look past like the central bank, the inflation, the interest rate stories, you know, things are moving there on the commodity side and especially on the energy side. And I think investors should pay attention to that kind of stuff.
Okay, let's go back to trading on technicals. What do people need to do in order to do what you do?
Right. So, you know, I think first of all, you want to have a basic knowledge of things such as candlestick charting, and that's just these. You know, if you look at these charts, you probably have seen those sort of vertical, rectangular, like red or green. They look like candlesticks, hence the name candlestick. But it's just a way to indicate where prices are moving, you know, on charts. So I think, you know, just understanding how to read those, that would be a good start. And then, you know, from there, you can apply simple things such as trend lines, moving averages. You've probably heard the term the 200-day moving average, which a lot of the financial media tends to use. And just, you know, learning the basics of how to use that and then putting it all together. And, you know, experience, I think, is the best teacher, right? You know, I've been doing this for quite some time. I think a lot of people think that, you know, you can just sort of read a book, and then if you know things go wrong, you can go back to the book, take a look at it, and say, okay, where did I go wrong? That's where I went wrong. But unfortunately, technical analysis doesn't tend to work like that. So I think you just have to have have some experience and develop a method. But it all begins with, you know, understanding the basics and that fundamentals. So I would say start with candlesticks, do simple trend lines. Do that support and resistance, which I've talked about, which is just, again, a fancy way to say, price floor and price ceiling. You'll find out in technical analysis and trading, I think we like to come up with these complex jargons just to make things, you know, complex, I guess, but it's very simple.
You gotta nerd out. You gotta nerd out. I'm going back to my nerdiness.
Exactly, right? So I think, you know, those three things, you know, just basic candlestick charting, support and resistance and trend lines, and then put that all together. And as I said, you know, experience is key. So I think over here, I still have my, you know, my trading journal here going back for a couple of years where I just, you know, every day when I have a trade or something, I'll jot down why I did the trade. Here's the reasons why. And then at the end of the week, I'll go back to sort of evaluate where I went wrong. And then I think that's really helped me out because I've developed sort of my own system with trial and error, and experience is something, you know, that you can't really teach, right? So I would, you know, I would say learn the basics and then start to apply them. And again, you know, don't worry if you're getting things wrong. You don't even have to do it with real money. You know, open a demo account or just watch the markets, right? And just say, okay, this is why I would have gotten in here and there. And then it'll develop, right? With experience, you develop, I guess, that wisdom and that knowledge. And something, you know, like I said, it's sometimes not something you can just teach. I think you just have to get in there and see for yourself and gain from experience. Skill,
gut, heart, nerd, all of the above.
All the above,
Vishal, if people want to get in touch with you or watch what you do or try and get a glimpse in that book of yours, maybe that's the book that needs to be written. You know what I'm saying?
Maybe,
where do they find you?
Well, yeah, my articles are up on EQUITY.GURU. I do a market moment article almost every day where I talk about where markets are going. If you're subscribed to the EQUITY.GURU newsletter, you'll see my charts, and I know a lot of readers are sort of surprised with what the technical analysis was saying for a few weeks in the past, because we've been warning people about certain areas in the markets where we've been seeing the charts tell us, maybe markets are going to be heading lower because of this. A lot of that's come true. So you can find that on our newsletter or subscribe to our newsletter, which is on equity.guru. And you can see my videos on the equity.guru YouTube channel where I talk about, recently we talked about the markets. I've talked about gold. I've even talked about the technicals on Bitcoin as well. So you can see all my work there as well.
Excellent. You also, of course, talk about companies that you're excited about. Vishal, thank you so much for doing this with me. I look forward to our next chat. Let's make sure it's not so long between First Glance with Jody Vance. I know you're a very busy man, but I like your nerd. You teach us a lot.
For sure. Thank you. We'll do that for sure.